Hello everyone, welcome back to my YouTube channel, and today we would be touching on the most important idea for finding buyers with CRT, and we will be doing something very important. And um, before we delve into what we have for today, I would like to drop something important which I would like us to put at the back of our mind or take note of. And number one would be that the time frame, right, would continue in its course. Like if it's bullish, it will continue, it will remain bullish until it gets into a key level, or there we see a reaction at a key level, right? So the only thing that can influence the trend or act as a turning point for bullish or bearish trend or at the key levels, right? So the key levels influence what the direction would be. And another thing is something that has been stated a lot of times by Romeo himself, which is a time frame, a given time frame, say the 1 day time frame like we have here, would continue to remain, like, to act its course. If it's bullish, it will continue bullish or continue being bullish until it reacts to a key level on a time frame higher than the key level you're looking at. That is, the daily time frame would continue to remain bullish until it reacts to a weekly key level or a monthly key level. The weekly would continue to remain bullish or bearish until it reacts to a monthly, 3 month, 6 month key level. There's been this statement that has been something that has been very popular amongst CRT traders, and it's the statement made by Romeo where he said week below would give higher prices, week above would give lower prices, close below would give lower prices, and close above would give higher prices. And the only time this would fail or change is when you're looking at a specific time frame like daily, and price is reacting to a key level. So it's only a key level that would influence the outcome of this. You understand? So whenever you see this fail, or whenever you see that it's not going according to plan, there should be a key level that's influencing the reaction, making it not to pan out like this. You understand? So here, right here, where we have this candle. Okay, let's use this candle first. You can see right here, price closed. We are using the previous candle. Price closed above this candle, closed above this candle. So the next candle close above, we need bullish. We are expecting higher prices, so we know we'll be looking for opportunities to buy at below the open price of this candle, right? So the next one also, since this candle closed above higher prices, now right here we can see that we have a key level right here, and there should be something on the high time frame as well. So this old high, previous full of liquidity, buy side liquidity rests around that area. So we have high, and here price has failed to put out higher prices, right? But still we are yet to get lower prices, right? So since price is still within this range, we are still working with this candle. Now when we now see that price has broken this candle here, I think here price broke it with this candle, we expect to see lower prices, right here. Since we broke below this candle, we failed to put higher prices, we failed to put a close above, so we close below lower prices outside this candle's range. Now all the remaining candles inside of this guy are within this candle's range until we got to right here. So here, this one was within this candle's range, although we got a week above lower prices. Sorry, week above lower price. So I'll just change that right now. So we got a week above right here, and we're expecting lower prices within this range still. Now we got a week below this guy, week below this candle. We're expecting higher prices week below and closed up higher prices right here. So we are now within this candle's range. We got a week above, expecting lower prices, right, inside this key level as well, this fair value gap, right? And we finally closed below this candle's range. Now we are seeing lower prices, right? Lower prices right here, close below. We are to expect lower prices. Price did not weak the low of this candle. We got weak above, right, and here close below lower prices, just like that, until we get right here. So this is how you can really decide a bias, right? But there is a way to be more solid with it, right? There is a way to be more solid with it, and that is waiting for two of this to happen at the same time, right? That's what we call the CRT equation. We now have, when we add like both together, it gives us more, it gives the setup more strength. You understand? When we have weak below and close above the same candle, a week above and close below the same candle, it gives it more strength. So right here, we got a week below this candle and we got a close above. So it's giving us that we could be looking for serious longs from here. You understand? Serious longs from here. Right here, we got a week above this candle right here, and we got a close below, and you can see we got that sell until it changed right here. So right here we had this single candle, week above right here, close below right here. You can see how price expanded to the downside. So when you use the idea, when you sum them up together, now it gives you more strength in that setup, or more confidence to hold that setup. When you see it like this, together, gives you more confidence to hold that setup. And this week above, week below higher prices, this last two right here, they rarely form or barely form, you understand? But when it does, it happens, like it moves too. To get more confirmation in direction, you'd have to use them together. So that will be all for now on this video. I want you to go into your charts and look at this, look at your bias, like try to determine your bias from the lens of what I've just shown you, and see how you get better with reading the bias and deciding what the next candle will do. So that will be all for now. I'll see you again next time. Bye for now.